This is not financial advice. I am not a financial advisor. Before taking any action based on the information provided on this channel, it is recommended that you seek the advice of a professional licensed financial advisor.
Let's do this.
Welcome back to TAQ Capital, where I do technical analysis quickly, and I like to focus on that quickly part, so we're going to jump right into the charts. All right, I've got several things I want to talk about today, and the first is this pink wedge here that then became the purple wedge, because once the pink was broken, the purple took over. And let me show you what I mean here. On the pink wedge, we had a hit, a hit, a hit, a hit, and then breakout. But it didn't stay broken out long and instead shot right back up in. So what that means is the pink was a bust and is no longer there, and now we're over onto the purple with a hit here, hit here. Instead of this being a hit, this is the next hit. There's your fourth hit. Here's the breakout. So now the question becomes, is this more of the same? Is this another repeat? For instance, are we going to be switching this now down to here, and then this will be a higher yet, making this one, this two, this three, and then wherever this hits, 4, and then we get a breakout? That's the question of the day. As of right now, we have to assume no. So let's look at what's happened since it left the purple wedge. Well, first off, it left the purple wedge in this yellow wedge. So we had our second hit, and then third hit, fourth hit, breakout. Then we broke out into the blue wedge, hit, 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 and now we're working on something. Now this is a symmetrical wedge. The blue wedge is symmetrical, so this is actually going down while this is going up. So it's not ascending and it's not descending. So what typically happens here is the way that it comes in is the way that it goes out. But because we're only on the 15-minute chart, honestly, there's no telling, because the 15-minute chart is wholly unreliable. So then we have to go elsewhere for some answers. So we bring in the Ichimoku Cloud and the Bollinger Bands to see if we can get some clarification. Now again, this is the 15-minute chart, so it's notoriously unreliable. If you see here, we've got the breakout of the Bollinger Band here, which pulls it back in and goes up. It actually doesn't quite touch the Bollinger Band. So we have a hit here and then a hit here without a hit up here. So we come back down, go back up, we actually break out here, retest, come back down, and we actually break out here. Now this is not like a wedge where you get a 1, 2, 3, 4 out. It'll continue to bounce off of these Bollinger Bands indefinitely. But one thing I notice right off top is that we've got the green coming down towards the red, which signals that we could be looking at a swap here, which is more of a bearish move. So we could have something like a breakout coming down out of this blue wedge, like is suggested. Because we came in here, we should go out. No guarantees, of course. If we jump further up the time frames to see what we've got in the others, we've got the red that's actually coming down here to break through the green, indicating that the green would be up above. So this is more of a bullish signal. So once the green is above, like for instance is probably the case here on the 1 hour. Oh no, it's not on the 1 hour. Okay, so this is the mouth has opened here. The red is staying strong. What that typically means is that these will get sucked up into this area. And it's sort of happened here, but not exactly a lot. And now this is just kind of lingering around the Tenkin line. If we jump up to the 2 hour, this really explains the boring day we're having. This line they've both merged and it's staying straight, splitting the Bollinger Band because you got this up here and this down here. It's not an even split, but it's close enough. And this is just lingering. So if I had to pick, I would say we're going to get a break up towards the lines, towards the Tenkin and the Kijin. But this is just stagnant. There's not much action happening here at all. If you zoom out further yet and you jump up to say the 12 hour, and if you've been watching my videos lately, you'll know that I'm expecting this to break out of the red and then break out of the yellow. But obviously the question on everyone's mind is when. There's enough bearish signals going on here to at least question the bullish narrative that a lot of YouTubers are throwing out there with their hopium hype faces and so on. You can speed up the momentum of your intro music all you want. I mean, it's not going to go against the charts. However, you know, I've been talking about a major bearish move happening since back here. And I mean, if anything, it's been bullish. I mean, yeah, there was this retracement here, but it's just constantly been going up. And even though it comes down a little bit, it goes back up, down a little bit, it goes back up. So we're getting higher highs and higher lows, though that can't continue for much longer. And I'll show you a couple other reasons why. This is the RSI on the 3-minute chart. And you can draw wedges on these just like you can with pricing. If you scoot over here and apparently wait for it to load, you'll see that this peak is the highest peak for quite some time. It's actually higher than this one. So this is the beginning of a downtrend. Now, if you want to be double dog, sure, you can kind of back up here and draw the uptrend where it broke to know that this was the transition, the handoff, where it began the downtrend. But if you take my word for it, and we look here closer, we've got a hit on the orange, a hit on the orange, a hit on the orange, and now we're waiting on a hit on the orange. I tend to think it's going to be somewhere around here, but I mean, there's no telling that it won't just drop here. The reason why I say that is because symmetrical wedges, well, you can always draw them if you're not taking it in the broader context. The symmetrical wedges don't really happen in the RSI. It's not like in the actual pricing. So you're not going to be able to take, for instance, the orange line here and drag it up to make that the case. And then we've got our 1, 2, 3, 4. Oh, I'm off one. Here, and then just claim that because it broke up into it, it will break up out. It just doesn't work that way. I mean, why? I don't know, but I've been looking at these things for so long, I've never seen it happen. And then if you look at the blue wedge that's being drawn inside of the orange wedge, you've got 1, 2, 3, and again, you can't have this happen here. So that can't be the next blue line. It has to come down below this point here, which puts it somewhere around in here. So I think that we're going to have a bottom on the 3-minute here, and then we're going to break up out of the blue and then break up out of the orange. So we're not at that bottom bit yet. Now this could all just take place. Well, let's look at it how this is lined up with the price. Because this is only the 3-minute chart, you can see that this wedge here began. Now these are off this line because I've now zoomed out to the 4-hour, and they'll go back as soon as I hit the 3-minute. But you can see here that these two spots actually begin, you know, right around here, which would be, 4 o'clock yesterday. So it's not exactly a huge window. It's just this tiny little bit. So, but what it's telling us is that we're looking at going lower before we go higher. So we might have another completion of the blue bouncing off support here before we do something else. And if we zoom back out here to the 3-minute, it started up here, and then this run down was a full run down. Now these are not always a 1-to-1 ratio. So just because this distance took you this distance in price here doesn't mean this distance will take you the same price, over here. But you can sort of count on it, or use it as a guide, I should say, not necessarily count on it. So if we go from here down the halfway point, because from here to here versus here to here, this is approximately the halfway point. So if we go from here down to here, we're talking about half the price action that took place up here, maybe something like this. Let's use the measurement. Looks like we're talking about 2.5%. And the blue line for the wedge is 2.67% down. So this could very well be that action that we'll see coming. If we load the 16-hour chart and we look at a similar situation with the wedges, you can see here that the peak was back here on March 16th of 2019. Then we came down, hit here, came up, hit here, and now we're waiting on this fourth one. We haven't even come close, really. This purple line, the same color as the RSI, is the lowest hit that we have on the RSI on the 16-hour chart, and that's a 9.92. Then if we draw a wedge within a wedge, we've got the yellow, which gives us a hit here, then here, then here, and then technically here. And this is actually going down. So this would work. And if you zoom in, you'll see that we actually don't hit right here. So this could indicate that we're actually going to go up and break out the top of this yellow here. We don't know that yet, obviously. So then if we switch to trying to figure out what's actually going on in this upward wedge that I haven't created yet, that might give us some answers. Well, this is extremely unclear. I mean, you could count 1 hit, 2, 3, 4, and then we tried to get it down and out here, got it down and out here, but it came back in, got another down and out, and now we're just kind of continuing along the way. But this would be very bizarre. So another possibility would be this, where we've got 1, 2, 3, 4, and then this breakout that didn't last came back in, another breakout. We're just kind of riding the line now. I mean, crazier things have happened in the charts. Even that doesn't seem very realistic. So then what next? Is it the first symmetrical wedge I've seen in the RSI with a hit here, a hit there, a hit there, a hit there, and then a break? It's possible. I mean, technically it could come down here and then break up because, well, we came down into it. But I don't know. I've never seen a symmetrical wedge in the RSI. So this would be a first if that's the case. I mean, we're doing a lot of firsts right now. I mean, Bitcoin is at an all-time low for dominance. We've also got being below the 200 weekly moving average for a number of weeks rather than just a quick poke out or a candle like has been the times before. So we are dealing with some firsts, but I wouldn't bet that what we're looking at now is likely. There's got to be some other explanation. For instance, is it just going to go up again in the short term, just enough to get you that upward angle so we're not dealing with a symmetrical wedge? Maybe something like this, where we get this pop-up. So we'd have a 1, 2, 3, and then this turnaround to a 4, and then, well, a break. Yeah, it'd be a breakdown. That's possible. What would this look like in the charts? Well, we already have the 1, 2, 3, 4, and we should be looking at a breakdown, like I've been saying. But if we were to have this breakup here to complete what I just showed you in the RSI, it'd have to be something like this here. But it would have to take us just high enough for us to need to pivot this up to meet it, removing this as a hit. So then you'd have 1, 2, 3, 4, and then down and out, which is entirely possible. So looking for some other answers to see if that's something that could transpire here, let's take a look further. If I turn to Fibonacci for some answers here, this is a Fibonacci channel. You can see it got caught here, went up, and then on this line here, each one of these lines is just another Fibonacci line. It got rejected and then sort of straddled this line, came up above, back down, got caught by this line, bounced off of this line, managed to get through here, broke through with a wick candle, but was stopped on this candle. We can kind of see, some these candles respecting these individual lines. It's not perfect. There's another one. There's another one. Some resistance. Sorry, some support rather. Support there. Looking further. We've basically just been straddling this line ever since. Now here we try to break through this one, didn't work, try to break through it again, arguably there, try to break through it again there, and that's not working. So we've been rejected 3 times by this line. So there's a good chance that it's not going to be able to pull it off. You can also see that it's pushing out of the Bollinger Bands here on 4 different candles, 4 wicks. So it's failed to fight against the Bollinger Band and this Fibonacci line. So this to me is more bearish, that it's actually going to give out and come down. Let's see what the cloud has to say. Here's the Ichimoku Cloud with the Bollinger Bands in our upward broadening channel. Well, and then there's the ascending narrowing wedge here. So if you look at just the cloud, this space here is bigger than here, is bigger than here, is probably about the same as here. So this pulled this in, this pulled this in, this is currently pulling this in. I think it'll bring us down out of the red wedge and bounce off the Kijin here. So this, if you're in a short right here, this would be a good time to take profits. And might do a little bounce off of it and then continue to go down and finally break out of the purple, and that's when you'll be getting into the major meltdown. And another reason why I think this major meltdown is coming is because of this. This is the Dow Jones. In 2008, right before the meltdown, we were right here. And now it's 2022, we're right here. And you can see that this candle right here is 31 weeks from the highest point. Same over here. This candle is 31 weeks from the highest point. Now, granted, we just started this weekly candle, so we're going a little bit higher. So we're going to, maybe we'll be off by a week or two. But you can see a definite similarity between these two charts. In fact, if I just switch to a line, that might do it. I don't know if that provided any more clarity for you, but that's what we're looking at. If I switch back to the candles here, we bring in the Ichimoku Cloud. You'll see over here, this completed this green swing up and then met the red and broke down. Now over here in 2022, we're working on completing that, coming up to the red right before you're going to get that breakdown. Or potentially anyway. So that's another thing to take into consideration. And then last but not least here, this chart highlights the inverse correlation between the 10-year yield and the S&P 500. You'll notice here when it's going up, this is going down. Up, down, down, up. Inverse correlation, not rocket science. This line here is a major support line. You can see here, 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 and this is going back to 1989, guys. This has been established. And what have we just hit? So while this decides to go up to meet that line, this is going to come crashing down. And just like the last chart, why does this matter? This isn't crypto. Well, when the stock market crashes, crypto crashes also. And you can see that going back to March 2020 in the COVID meltdown. Bitcoin did the exact same thing. Cryptos did the exact same thing. And then, yeah, they took off. But if this is going to be continuing down like this for God knows how long, and this could just be a blip too. It might be more like, something like this, and then goes back up some more. And if that's the case, when does that end? I mean, this would say 2024. I'm not at all saying that. I don't know how quickly this line is going to be. Maybe it's going to be more like this line here, and it's just going to shoot straight down like that, and then back up. So obviously, I don't know. But it's another interesting thing that's kind of pointing towards the bearish scenario. And I'll finish it on this note, just looking at the Ichimoku Cloud. We've got the Kijin on the daily here. And then if we switch to the 2-day, this shows us the Kijin on the 2-day at 21,903. And this space here is bigger than this space, is bigger than this space. So this is indicating that there will be a pull coming from here, pressure being applied to the top, and the candles coming down to meet it, which is working or would complete this red wedge, complete the blue wedge, and begin the breakdown towards the bottom of the yellow wedge and the eventual breakout. So I'm still bearish. There are some things that do appear a little bullish, but not enough to make me feel too comfortable about it, and nowhere near where I would enter a long. One more thing now that I think about it, using the Fibonacci fan, you can see that these lines are being respected here, here, there's the double tap there, and you can shrink down from the 1 week chart that I'm on and go to like a daily to get an even better view of how these lines are being respected. But you can see that we managed to we got rejected off of this line, tested it again here, and then finally managed to break through it. And we've just kind of been coasting. And we're making our way over to this line. I don't think we're going to get there, primarily because this line is also the exterior of the wedge, which would mean we're going to break out. And I just don't think we're dealing with that bullish of a scenario. It is possible, but that's not where my head's at. So I just thought I'd hop over here and see if I could see anything else to add to our predictions. We respected it again here and came down, sort of rode this line, came back up, tried to break through it, broke through it, and then just kind of dwindled before we came and dropped to the next one. Up, drop to the next one. So this is another possible indicator that we can, take into consideration, but this too doesn't provide a whole lot of answers. So at this point, I'm going to be cautiously bearish. And should something change, I will jump in here and update you guys as quickly as possible. So thank you for watching. Sorry this wasn't as informative as I'd hoped. The charts just aren't telling us that much right now. So cautiously bearish is my final answer. And I'll catch you in the next video.